Good evening, ladies and gentlemen. I hope you are all feeling energized and ready for an informative and engaging webinar today. My name is CA Rashikagra, and I'm absolutely thrilled to be your master of ceremony for this event. Before we dive into the exciting content we have lined up, let me share a little bit about myself. I'm a practicing chartered accountant with 14 years of experience in accounting, taxation, and auditing. But that's enough about me. So ladies and gentlemen, I welcome you all to our highly anticipated webinar, Tax Audit Brain Trust. I'm delighted to have each and every one of you joining us today as we delve into the intricate world of tax audit and provide you with expert insights, valuable strategies, and answers to your burning questions. But before we dive in, let me introduce you one of our esteemed panelists. Everyone, please welcome CA Chandrasekhar Chitale sir, Vice Chairman of Tax Audit Quality Review Board. He is an accomplished professional with a diverse range of qualifications and experiences. He holds a BCom degree and a LLB degree and is a fellow chartered accountant. Notably, he has served as a member of Central Council of Institute of Chartered Accountants of India for 2 consecutive terms spanning 2019 to 22 and 22 to 25. Currently, CA Chitale Sirji has held significant position within the ICAI as Chairman of the Ethical Standard Board and Vice Chairman of Taxation Audit Quality Review Board. He is also former Chairman of the Direct Tax Committee, Peer Review Board, and Corporate Tax Governance Committee. Now I'll hand it over to you, Sir Chitale sir, for your opening remarks. Sir, please unmute yourself.
Yeah, thank you, Rashi. Chairman of Taxation Audit Quality Review Board, CA Dr. Raj Chawla, our intelligent directors, CA Tapanjit, CA Jatin, and also Rashi, who would be associated with this particular program, and all of you fellow members. It's indeed a pleasure to engage this particular webinar, which in a series which was started by Taxation Audit Quality Review Board under leadership of CA Dr. Raj Chawla. The intention of this series was, whenever, as far as Taxation Audit Quality Review Board is concerned, TAQRB, the job entrusted to it is whenever any tax audit is performed, maybe certain tax audit reports are selected by this particular board. And through reviewers, through panel of reviewers, the board ensures that the quality of tax audit is maintained. If there is any derailment in the quality, maybe a chartered accountant, we send a reprimand, maybe we send suggestions. And in case of substantial errors which are being noticed, maybe the TAQRB is constrained to refer that case to the disciplinary committee. So it is not our intention that there should be more and more mistakes, but we want more and more error-free tax audit reports. So with a view to assist the chartered accountants community to come out with error-free tax audit report, this particular series has been started. So earlier in this series, we had on various topics, the lectures were engaged. The topics covered were even the accounting standards having bearing on your accounts from the perspective of tax audit. So for example, when you are doing audit of partnership firm, a cooperative society, a proprietary enterprise. In that case, you have to issue Form 3CB. When you are issuing Form 3CB, it is necessary that you have to issue a report on true and fair view of financial statements. When you are issuing true and fair view report on financial statements, it is necessary for an auditor under the accounting standards that whether those standards are followed or not by the entity is required to be commented upon. And if they are not followed, then it is necessary for him to mention that non-following of those audit accounting standards. If it is not done, then in that case, the tax auditor may be considered as guilty of non-compliance with the mandatory accounting standards. So the responsibility is onerous. In the CSM of conducting tax audit, the aspects relating to accounting standards, relating to auditing standards, they are missed. In case of auditing standards, let me point out that in case of SA 700, it is necessary that those 2 paragraphs that these accounts are maintained by the auditee they have selected accounting policy, they have prepared financial statements, etc. And then what the auditor has done, he has done audit of those financial statements, the books of account, in terms of generally accepted standards on auditing. So these two paragraphs are mandatory. If you miss on that, then also you are non-compliant of standards on auditing, which are mandatory of compliance. So we don't expect that such errors happen in case of tax audits. And with this view, the series was coordinated. Chairman has taken a great lead and pains to see that this series on each Friday takes place. And then on last 2 Fridays, this Friday and coming Friday, it was thought fit that maybe number of queries were received. We also invited questions. So rather than being a monologue, discussion on the topic that is selected by us at TAQRB, let us also address the issues that are raised by the those who are attending this particular webinar. So this is the main purpose of this 2 Fridays. And I'm sure that whatever queries you have, maybe you will raise in chat box. Maybe if you miss out this Friday, you can still send it to the TAQRB. Next Friday, we will certainly try to cover them up. And as you are aware, the email ID of TAQRB is taqrb@icai.in. So you are welcome to send the queries. Right now, we have also received the queries, and all these queries will be addressed by myself and the chairman in this particular webinar, along with the assistance of our 3 young and brilliant chartered accountants. Thank you.
Thank you so much, sir, and welcome again. So, ladies and gentlemen, now please welcome CA Dr. Raj Chawla, sir, one of our another panelist and chairman of Tax Audit Quality Review Board. He is a practicing chartered accountant since 1992, specializing in areas such as income tax, auditing, cost audit, and XBRL. His impressive qualifications include chartered accountancy, company secretaryship, cost accountancy, diploma in information system audit, bachelor of law, member of the Institute of Management Accountant USA, peer reviewer, PhD in international finance, and associate of Institute of Chartered Accountants in Australia. He also holds a BCom honors degree. He serves as a Central Council member of Institute of Chartered Accountants of India and has had leadership roles such as chairman of UDIN Directorate, chairman of TAQRB, and vice chairman of MSME and Startup Committee. He was also the chairman of NIRC of ICAI in 2015-16. Now I'll hand it over to Chawla sir for welcome address. Over to you, sir.
Before you address Chairman sir, one more international responsibility which Honorable Chairman is holding, and it appears to have been missed, that he is also technical advisor in the Edinburgh Group of Chartered Accountants, where number of countries are members, of which India is also a member, and he is playing a great role. I think he paid a couple of visits to USA to attend those meetings of Edinburgh Group, which comprises of various institutes of chartered accountants from across the globe, particularly from Europe. Thank you.
Thank you, Chitla, and thank you, Rashiji. Good evening, my dear fellow colleagues. I welcome you all in a very important webinar on tax audit. Brain Trust. Your question, your answer. Today, we are going to discuss various question and answer with respect to preparation and filing of tax audit report, which will help the members in performance of their professional assignment of tax audit. As you all are aware, tax audit play a vital role in ensuring compliance with tax law and regulation and help to identify discrepancies or error in the financial statements and tax returns of businesses. It becomes very important to conduct the tax audit carefully and report the details appropriately. Our today panelist for the webcast, CA Chandrasekhar Chitleji, and myself will answer all your queries. Also, we have with us 3 young and dynamic practicing chartered accountant, CA Rashi Tagraji, CA Tanpreet Kohli, and CA Jatin Tagraji. So I am confident that today webinar will be a valuable addition to our professional knowledge. Thank you.
Thank you so much, sir, and welcome again. So now meet one of our accomplished moderators, CA Jatin Tagra. He is a distinguished co-author and accomplished professional in the field of chartered accountancy, renowned for his commitment to excellence and diverse expertise. With a Bachelor of Commerce degree from CCS University in 2008 and his Chartered Accountant qualification in 2011, he has solidified his credentials. CA Jatin Tagra is also a dedicated educator serving as a faculty member with the Institute of Chartered Accountants of India since 2012. Welcome, Jatinji. Now meet. Yeah, thank you.
Welcome.
So now meet another proficient moderator, CA Tanpreet Singh Kohli, a tax expert with extensive experience in advisories, consultancies, and representing clients before tax authorities. Known for his progressive approach to client service, he is celebrated for insightful advice that enhances business activities and resources optimization, resulting in increasing profitability. So welcome, Tanpreet ji.
Thank you, Rashidi. Thank you very much.
So I welcome all of you once again. Now, without further ado, let's get started with our tax audit brain trust, your questions and our answer webinar. I will hand it over to our moderators, CA Jatin Tagra ji and CA Tanpreet Singh Kohli ji, to kick things off with some foundational insight. Jatin ji and Tanpreet ji, over to you.
Thank you. So, Chitle sir, first question that the audience has shared with us is this relates to GST reporting. So now the question is, GST related details are not gathered from the software maintained by the SESI. So can we qualify it in the report? Because you see, the audience mentions that it is impossible for them to verify, to gather it, obviously due to multiplicity of details.
Thank you. See, as far as compilation of details is concerned, one has to distinguish between audit and compilation of details. Compilation of details is the responsibility of the auditee. So whatever question is asked relating to GST, whatever payments are made to the registered dealers, composition dealers, unregistered dealers, these particulars are required to be compiled by the auditee and furnished to the auditor. This is the first thing. As you are aware that the Direct Taxation Committee comes out annually with this tax audit guidance note. And in tax audit guidance note, this view has been amplified that auditee has to furnish the tax audit particulars. And then whatever particulars are furnished, tax auditor has to make the report. While making a report, he can take his own view. Now, where the auditee himself is unable to present the details, in that case, the auditor will not be able to audit them. So he will have to put a disclaimer that since for want of details, we are not able to audit them and not able to present them in the tax audit report. And to this effect, even the tax audit guidance note has made comments that two things. One is whether the details are provided and they are voluminous, maybe because of volume, because of want of data, you are not able to verify, or the data not being provided by the assessee. In that case, you are unable to furnish that data. So those guidelines are also given in our tax audit guidance note. So accordingly, the note can be mentioned about whether it is rather disclaimer. And if the data is furnished, you are not able to verify, then also it will be disclaimer. Qualification will be when you say that there is some error in that particular data or there is a mistake. So technically, yes, you have to mention. Only as far as this mention is concerned, what we have recommended in tax audit guidance note is this mention has to be at paragraph 3 in form 3CA or paragraph 5 in form 3CB. So accordingly, one should deal with it. Thank you.
Thank you, sir, for the answer. Now, I have a question for C. Raji. Raji, this question is again related to the tax audit plus as well as peer review and the code of ethics. And again, this question has been asked by so many chartered accountants. The question is, is it necessary to procure a distinct appointment letter from the client for both statutory audit and tax audit purposes in case both the statutory auditor and the tax auditor are the same?
Yes, because both the audits are under the separate act. This statutory audit is conducted under the Companies Act 2013 and tax audit is conducted under the Income Tax Act. So because both are separate audits, so we must take separate letter of appointment for that.
And that is also prescribed under standards on auditing.
Yes.
Thank you, sir.
So this is one question that has been asked by, I'm sure, many CAs, and it's confusing a bit. Under clause 44, we need to report all the expenditures, the details of expenditures, as in whether they are registered under GST or not. So this question relates to capital expenditures. Under clause 44, whether capital expenditure are required to be reported for an entity which is not claiming inputs, like restaurants, even hospitals to an extent.
To whom it is asked?
Sir, to you, sir.
Okay. See, as far as clause 44 is concerned, it uses simpliciter the word expenditure. It is not qualified by the words or adjectives capital or revenue. So all expenditure which are incurred by the assessee are required to be covered for the purpose of section 44. So that expenditure may be debited to the profit and loss statement or it may be debited to balance sheet. Both are covered.
So just an extension to this, in fact, just looking on the sheet, this clause particularly refers to sum of all the expenditures, and then it is a column of serial number, but it has no reference of particulars. So can you please deliberate on this relevance of serial number per se?
In this case, they have not asked to present the data account head wise or expenditure wise. So maybe you can aggregate all the expenses and put it in one line. That is possible. Then there will be only one serial. But supposing if the assessee has given account head wise details, supposing raw materials account, wages and all those things. So all those serial numbers will come. Or maybe expenditure debited to profit and loss account, maybe serial number 1. Expenditure debited charge to balance sheet, maybe serial number 2. So that may be the relevance of serial number. But then mention of serial number will not really guide the manner in which you have to report. You can report in one line only total expenditure. So there would be only one serial number.
Okay, thank you, sir. Thank you very much.
Now my question is to CA Raji. Raji, this question has been asked by the multiple professionals that the threshold of rupees 10 crore shall be applicable for tax audit in case of trading in equity and the similar instrument. So considering 95% of transactions are conducted digitally, could you please specify the required document that the client need to procure from their stockbroker to accurately account for purchase made during the year, sir?
Yes, very correctly. Because the transactions are more than 95% digitally. So in this case, you must take the following documents. First, the contract note of your transaction, statement of account, demat account, and the consolidated statement from the broker. These are the documents which is required for that purpose.
Thank you, Raji.
Chitresh, sir, next question is for you. Basically, this is a two-pronged question. First, is it possible to revise 3CD in case of incorrect figures and improper clauses have been entered? And in addition to this is more on the, I'm sure, on the compliance regulatory part, that is it possible for one CA to file the audit and then for another CA to revise the tax audit report?
Firstly, coming on revision of tax audit report, let me state that the ICAI has issued guidance note on revision of audit reports. So revision of tax audit report is permitted by the institute. Now they have given circumstances in which you should revise. If the errors are noticed, omission is noticed, etc., you can revise. When a revised tax audit report is furnished, one has to be compliant with certain matters which are given in the guidance note. Number one, when you are issuing revised tax audit report, you have to specifically mention that that is a revised audit report, so that any reader should know that this is not the original tax audit report, but it is a revised audit report. That is number one. Secondly, while you are issuing revised tax audit report, mention has to be made of the earlier or original tax audit report which is getting revised. That is number two. And thirdly, the reason for revision. So if there is omission, if there is commission, so what is the reason for which the revision has been made? So if we consider from ICAI perspective, revision is possible subject to compliance with these two procedural requirements. As far as Income Tax Act is concerned, tax audit reports are prescribed under Rule 6F, where the rule itself permits tax audit report revision, but that revision is confined to two aspects. One is if post your conduct of audit, any variation has taken place under section 40A or 40A1A or 43B. Supposing GST, as at the balance sheet date, 10 crore rupees GST was outstanding. till the date you complete audit, say 20th of September 2023, 6 crore GST has been paid. So you will reflect 4 crore as unpaid, and to that extent, under section 43B, 4 crore would be disallowed. But supposing the assessee is furnishing return on, say, 25th of October, and by, say, 22nd October, he has paid further 2 crore rupees. In that case, the disallowance under section 43B will get restricted to 2 crores and it will not be 4 crores. So the assessee will keep 2 crore rupee as disallowable, but when under 143(1) the program runs, it will pick up the disallowance of 4 crore rupees from tax audit report and make addition of 2 crore rupees. So in order to avoid this addition, the CBDT has suggested that you may revise the tax audit report so that that addition does not take place. But then assuming that the tax audit report is not revised and then 4 crore rupees are disallowed, is it appropriate? Certainly it is not appropriate, because the program should have seen what is the payment of GST. The payment is 8 crore rupees and only 2 crore rupees should have been disallowed. So this is limitation of the program which runs under section 143(1). In any case, if this addition is made, maybe under section 154, it can be corrected. So this is as far as revision is concerned. So revision is permissible, but it is not mandatory in these cases. Now coming to the point of time of revision, the revision has to be made before it is considered by the assessing officer. So before completion of assessment, if you revise, fine. But after completion of assessment, if you revise, then that revision has got no value. So in that case, if there are any errors, any mistakes, auditor would be held responsible. Thank you.
Thank you, sir.
Now, next question for Raj sir. Raj sir, this question is specifically from clause number 34 of the report. See, there's a problem that in the case of individual assessee, like who is liable to tax audit, and there were no transaction which attract to the TDS, TCS, because it was maybe first year, or might be like he is not aware of the fact that he has to deduct the TDS. So like there is no provision has been attracted regarding the TDS and TCS, and the assessee has not applied even for the TAN registration. In such a situation, how we can deal with the reporting aspect?
In case of individual, if you are under tax audit, then you are required to take the TAN number and deduct the TDS. But if there is no transaction where TDS is to be deducted and assessee has not taken the TAN number, then there is no problem. Under clause 34A and 34B, you can mention no. And also, as per the reporting is concerned, in the form 3CA, you should mention in para 3, and if form 3CB, you can mention in para number 5. This that the assessee has not taken the TAN number, and because there is no requirement of TAN, because no transaction was there in which the TDS is required to be deducted.
Thank you, Rasa.
Only in case of individual, it is for the year preceding the previous year that he is subjected to tax audit or any audit, then he will be obliged to deduct tax. Not during his, supposing current year he is subject to tax audit, then he will not be liable to deduct tax unless he was subjected in earlier year. So one has to consider what is the position in earlier year.
Noted, sir.
Yeah.
Thank you.
Chitlesa, next question for you. This concerns two clauses, again, clause 34 and clause 44. First, coming on to clause 34, the question is the same more or less, but the clauses are different. For clause 34, sir, the question has been asked as whether in the section of expenditures, do we enter those expenditures corresponding to which TDS has been reflected in TDS returns, or the one that is there in the books of accounts? And do I ask you the linked question as well?
No, I'll answer one by one.
Sure,
and generally when you are mentioning clauses, just amplify what is asked in that clause, because all audience may not be having those clauses before them. So they will also understand what is the requirement of that clause. So as far as this reporting is concerned, reporting is silent, whether it should be as per books of account or as per the reporting in your TDS returns. But it would be advisable to go as per TDS returns for the obvious reasons that then it becomes comparable for the assessee to demonstrate before the assessing officer, for assessing officer to go through those returns which are uploaded by the assessee. So it is advisable that you report it return-wise, that is salaries, interest on securities, etc., so that would be more amenable to verification by the assessing officer. But if you mention account head-wise, there is no bar, because it is possible that maybe under contractor, some payments may be covered under, as a professional, some may be covered as a rent, some may be covered under 194C. So that may create some confusion. So better to go with the section-wise, 194, 194A, and so on.
Thank you, sir. The related question to this is on clause 44, wherein the details of breakups of GST expenditures are sought. In this case, the question is whether the assessee should enter the details vis-a-vis GSTR 3B, or should it be the books of accounts that should be used?
No, generally it should be as per books of account, because you are doing audit of books of account and you are presenting the information based on books of account. Who are the dealers, registered, unregistered, etc. So, books of account wise would be more relevant, but if somebody presents as per this GST return, no harm. Only it should match with the books of account.
Okay, thank you very much, sir.
Raj sir, if you allow me, then next question will be inclusive of Income Tax Act plus Companies Act. And again, this is a general problem. And again, this question has been asked by the multiple users. Like, see, in the whether the tax audit fees include audit fees approved by the BOD Board of Director of the client company. If not, whether the tax audit fees has to be got approved by the board separately.
Yes. Because under the Companies Act, the audit fees is taken only the audit under the Companies Act. Because tax audit is a separate work which is to be done by the auditor if the company is required to get its accounts tax audited. So the tax audit fees should be separately approved by the Board of Directors and should be shown separately in the profit and loss account. So both are separate. Tax audit report is not inclusive of audit fees.
Thank you, Rajiv.
Chitlesh, next question for you. Clause 27A, wherein the CENVAT details are sought. In this case, whether the CENVAT details, it should be entered as per books of accounts, the one that has been claimed by the assessee, or one that aggregates under 2A and 2B of GSTR.
Whether CENVAT is claimed under GST Act?
As in, sir, whether the GST, whether one should prefer GST returns, what one has claimed in the GST returns, or what the books of accounts amplify.
What the question reads?
So the question is under clause 27A.
No, you read the clause.
This requires, sir, I'm just reading the clause. Amount of central value-added tax credits availed of or utilized during the previous year, and its treatment in the profit and loss account, and treatment of outstanding CENVAT credits in this account, in the accounts.
So it talks about CENVAT.
Yes,
CENVAT
sir.
is not claimed under GST law. So question is restricted to CENVAT. It doesn't refer to GST. So no need to refer anything relating to GST.
But
so
sir,
you have to restrict to CENVAT.
Yes, sir. So sorry for interrupting, sir. The Form 3CB, Form 3CD actually mentions, along with CENVAT, it mentions input tax credit as well.
Where it mentions?
Sir, in the clause itself.
In the clause it doesn't mention. It mentions in the program which is created by CBDT in conjunction with Infosys.
Okay, sir.
The form is one which is tabled before both the Houses of Parliament after being drafted by the CBDT. The form which is tabled before the Parliament is available in all standard books where the word input tax credit is not there. So if any burden is to be increased, it has to be by following due process of law. So CBDT can also seek information on input tax credit, but they have to amend the form. They have not amended the form. They have merely amended the program. But merely amending the program, you cannot enlarge responsibility of the auditor or the auditee. So I believe that the information should be furnished only relating to CENVAT credit and not relating to GST. In fact, seeing from the other angle, the auditor is also under the oath of secrecy. You cannot reveal details of clients to anybody else. So if having asked about the CENVAT credit, if you furnish details about GST, the client also may say that why you are furnishing information which is not expected of you. This view is also taken in tax audit guidance note that you have to restrict yourself to CENVAT. And today also for items like alcohol, then petrol, crude oil, etc., that GST is not there. They are under, I believe, state laws and certain other details. So GST in any case does not relate to this particular question. This is my opinion, and this opinion is also seconded by the tax audit guidance note.
Thank you, sir.
Raj sir, again I'm asking.
Of course, if you don't agree, you can also view your issue, concerns, no issues. It's not a monologue. Yeah.
Sure. Thank you, sir.
Raj sir, again, one more mixed question to you. Hope you're finding it easy, sir. Sir, the question is mix of Companies Act again, and the question is again relating to the Code of Ethics as well. The question is CA Ashish and his wife, I'm just taking random names, and his wife holding securities in ABC Limited, which with face value of 75,000 rupees, both together, sir. Whether CA Ashish is eligible to be appointed as the tax auditor of ABC or not, sir, with proper explanation, sir, please.
Sure, Jatin. Thank you.
No, the question is incomplete. 75,000 out of 1 lakh or 1 crore, that is required to be mentioned.
Sir, simple amount is given 75,000.
No, so you are okay. You will answer both the alternatives.
Sure.
Yeah, please.
Yeah. So you can answer because it depends upon percentage, not upon the value. If it is 75 out of 1 lakh, the answer may be different. If it is 75,000 out of 1 crore, answer may be different. Anyway, you may proceed.
Because under the Companies Act, if any relative is having a share capital of up to 1 lakh rupees, then there is no restriction. But if it is more than 1 lakh, then they cannot be appointed the auditor. And in this case, I think Chitla sir will give a proper explanatory reply.
No, you are right. But that particular debarment for conducting audit or disqualification is restricted to statutory audit under the Companies Act. Tax audit does not mention this disqualification, neither the Code of Ethics mention. But in case of Code of Ethics, if you are having substantial stake in the enterprise,
yes,
under under income tax law also, if you are having substantial stake in the enterprise, then you are not qualified to do the auditor. So generally, substantial stake is considered as 20% holding of shares which are giving you right to vote, to share profits, etc. So simply equity to the extent of 20% plus. So if 75 out of 1 lakh, he may be disqualified. Out of 1 crore, he may not be disqualified.
Very correct, sir. Because percentage is not given. Suppose the capital is only 1 lakh rupees, and out of 1 lakh 75,000 is holding by Mr. Ashish, as mentioned by Jatin, then there is a substantial interest. It is more than 20%. Then he will not be allowed to be appointed the auditor of the company. But under Companies Act, a limit of 1 lakh is given. So for tax audit, it is not allowed, but under Companies Act, it is allowed.
So only one under Companies Act also, 1 lakh is for relatives. For individual, he cannot hold a single share. Ashish cannot hold a single share if he is to be appointed as auditor.
Yes.
So in conclusion, Ashish is not eligible to conduct the tax audit of the...
No, we have not said that. We have said that if it is not having, he is not having substantial interest, then he can conduct tax audit. If he is having substantial interest, he cannot conduct tax audit. As far as company audit is concerned, even if he is holding 1 share, he is disqualified.
Yes.
As far as his relatives are concerned, that limit of 1 lakh may apply.
If percentage is more than 20%, then he is not allowed.
Okay. The question is CA Ashish and his wife together.
So, बराबर है, तो question incomplete है, तो answer भी incomplete रहेगा. You can...
Okay. Thank you, Rajji. Thank you.
Chitla sir, question for you. There's a salaried employee and he carries out derivative transactions in FNO. 2 possibilities. Turnover is more than 1 crore. Second, turnover is more than 10 crores. Applicability of tax audit is sought in this case, sir.
See, in case number 2, it is clearly applicable because turnover exceeding 10 crore to everybody tax audit is applicable. Turnover exceeding 1 crore. Now, if he is reporting his income under estimated income scheme under section 44 AD and he is in conformity with that section, then in that case, tax audit will not be applicable. If it is not in conformity, supposing under he is having turnover of say 1 crore 50 lakhs and he is reporting income of only 2 lakh rupees, that is below 8% or 6% as is applicable. In that case, tax audit is necessary, provided his aggregate income exceeds the threshold of 2,50,000. If it does not exceed this threshold, then in that case also, tax audit will not be applicable.
Thank you, sir.
Sir, next question to Rajji. Rajji, again, this question is very dangerous. And again, the question asked by the public.
ये सब dangerous तुम राज भाई को ही पूछो, मेरे को simple पूछो.
Sir, this question is again, you also comment on it that why you are asking these kind of questions. So question is, like if you miss the due date of the tax audit, then what will be the implication for that? Like if you miss the 30th September date. Over to you, sir.
Under section 44AB, every person who crossed the limit of tax audit, he has to get his accounts audited and he has to file the report also. But if suppose he has not get its account audited, or if audited he has not uploaded the return, then there is a penalty provision under section 271B, that is the 0.5% of the turnover or 1,50,000 rupees, whichever is lower. Yes. So in this case, as per your question, if suppose audit has been done, but it is not uploaded, then penalty must be there, will be there. Either audit is conducted or not conducted, audit report must be filed before the due date.
Means once auditing will be considered as done once it is uploaded.
Yes.
Okay, sir.
Only one or two supplements. He said that audit is conducted or not conducted. If audit is not conducted and audit report is given, maybe assessee is safe, but the auditor will be under the jurisdiction of TAQRB. He will have to face the music. And secondly, after section in series of 271, etc., there is one section I read, section 274, which states that in such circumstances, if there is a reasonable cause for not being able to upload the audit report within time, then penalty may not be imposed. So if there is a reasonable clause, और ये भी बोल देता हूँ कि आजकल लोग कंप्यूटर हैंग हो गया, क्रैश हो गया, ऐसे भी रीजन देते हैं, तो सपोर्टिंग एविडेंस विल बी रिक्वायर्ड कि ये ऐसा ही रीजन दिया है, क्योंकि पहले जब मैनुअल था तभी अकाउंटेंट बीमार पड़ता था, अभी कंप्यूटर पे आने के बाद कंप्यूटर बीमार पड़ता है. जो भी है reasonable cause है, you will have to lead the evidence.
That's why I have said that audit report must be uploaded, because in very rightly said that earlier time this was the problem, that the submission from the assessee was that due to some personal reasons of the accountant or his own, the audit was conducted, but it was not filed with the income tax department. So the penalty should not be levied. That's why now it is compulsory. Earlier, this type of language was not there. That earlier it was that audit should be conducted before the due date. But now it is specifically mentioned that audit must be conducted and must be uploaded. Only then penalty will not be there. Otherwise, penalty under section 271B will be there.
So related to this, one more question to Chitle sir. So what should be is there any disciplinary action, like if somebody claims that the auditing was done, but that has not been uploaded by his chartered accountant,
auditor,
by the auditor, sir?
If the auditor is negligent, then certainly there is a disciplinary case. As far as client is concerned, if the auditor is negligent, he may claim compensation also, that he is subjected to penalty of say 1,50,000. That is because of negligence of a chartered accountant. So under general law, he can, for breach of contract, he can claim the not only whatever sufferings he has made, but also compensation therefore. So it is advisable that when chartered accountant accepts the responsibility, because this is a contract, when you are appointed as a chartered accountant or auditor and you are accepting it, there is a binding contract that you will fulfill it. So if you are not able to honor the contract, then whatever consequences follow from breach of contract, they will follow. Additionally, if the complaint is made to the institute, then disciplinary action may be considered.
Thank you, sir. Thank you, Chitla sir. Thank you, Raj sir. Over to Tanpreet.
Chitla sir, next question for you. Is tax audit applicable for charitable trust registered under 12AA of Income Tax Act?
If charitable trust is doing business, tax audit is applicable. Because under the definition of charity, it also includes business under section 11(4). Owning a business undertaking by a charitable institution is also not ruled out. So, where the charitable institution is conducting business, if that business forms in the parameters of section 44AB, tax audit is mandatory.
Sir, if you may just kindly allow me a deviation to this, there's this recent judgment that I came across, United Education Society, that's of Delhi Tribunal, that speaks, that actually says that 11 to 13 does not envisage the tax audit provisions. So what's your view to it vis-a-vis the...
In case of educational institution, they were running college, you mean to say, sir, or school educations. So that is not business. That is not business. You are furthering objects of the trust. Business is, supposing you are a chamber of commerce and you are holding some trade fair, etc. That would be the business. Or if you are running an education institution and side by side you are running some canteen and others for students as well as for others, that would be business. Imparting education is not business. For imparting education, if you are charging business, these are not business receipts. These are receipts of the institution. So one has to consider firstly whether they were doing business or not. So you read the decision and then see whether, if the decision says that they were not doing the business and therefore it is not applicable, fine.
In this case, actually the facts were concerning the hostel they operated. So hostel...
So it is, yes. So it is ancillary to imparting of education.
Sure. Thanks, sir.
Next question to Rajji. Rajji, again, this is a very common problem. And again, Chitla sir, you are also, we would also like your comment on the same question. The question is, in the previous year, 2021, I'm specific with the year because in the last assessment year, or we can say previous year, 21-22, the turnover of the assessee was above 1 crore. And they have filed the return under section 44 AD, presumptive taxation. And in the current financial year, 22-23, we are taking it, the turnover is less than 1 CR. Can a tax audit be conducted by declaring a profit lower than 8% or 6%, whichever is applicable?
Yes, because if you are once adopting this presumptive taxation system under section 44 AD and you are declaring more than 8% in case of cash transaction and 6% in case of digital transaction, and in the next year if your turnover is less than that, then you have no option but to get your accounts audited. Otherwise, you have to maintain you have to come under regular assessment and you have to maintain your books of account on that. Chitla sir, your comment please.
Yeah, there is divided opinion on this. Some say that it should be conducted. Some say that if he is not breaching the turnover of 1 crore rupees and reporting as per 44 AD, then it need not be conducted. So the opinion is divided on this.
Yeah.
So can we conclude it as per your opinion?
No, it is always safer to conduct the audit rather than not conducting.
Yes.
Because if you don't conduct, you are exposed to penalty.
If once you have
audit fees may be lesser than the amount of penalty, probable penalty.
Audit must be there.
Okay. Thank you, Chitla sir. Thank you, Raj sir.
Chitla sir, question for you and also to Raj sir. Now, this is in the continuance to that approval of tax audit. So the question is, what would be the consequence of tax audit report if it has been filed within time, but the assessee has not accepted it, maybe due to XYZ reasons, personal reasons or some suitable, explausible reasons? Would that be considered as a time-barred tax audit? And would there be a penalty on it?
But to my mind, answer is an affirmative, because basically furnishing of tax audit report is responsibility of the assessee, not of the auditor. Now, in the mechanism, the CBDT has said that auditor should upload, he should accept. So really on acceptance by the assessee, it becomes the tax audit report which is furnished to the CBDT. If it is not furnished on or before the due date, then the consequences will follow. Of course, again, for the purpose of penalty, as we discussed earlier and Rajbhai pointed out, Section 274 reasonable cause also needs to be seen.
Very great.
Thank you, sir.
Raj sir, question for you. Again, to be specific with the paras, do we need to include the responsibility of auditors and management in para 3 of the Form 3CA or the para 5 of the 3CB, as the case may be, for the tax audit report?
Yes, because under this revised SA 700, forming an opinion and reporting on financial statement prescribed a revised format of the auditor's report on financial statement. Since form number 3CA and 3CB are required to be filed online in a preset form and the same are not in the line with the requirement of SA 700, there is no specifically allocated field for providing information relating to the respective responsibility of the assessee and the tax auditor as required in terms of principles laid out in SA 700. However, having regard to the importance of this respective responsibility paragraph from the perspective of the readers of the tax audit report, it is suggested that these respective responsibility paragraph may be provided in the space provided for giving observations under para 3 of Form 3CA and para 5 of 3CB.
Thank you, Rajji.
Yeah, Direct Tax Committee has made representation to the CBDT that you allow us some room for the purpose of mentioning these two paragraphs. Till today, they have not done anything. So these are the only room. This is the only room available. So there we have to state.
Thank you, Chitle sir. Over to Tanpreet.
Sir, a question for you, Chitle sir. Basically, on the fundamentals of tax audit. Now, this is when it comes to when it concerns the calculation of turnover, the eligible turnover. Basically, when for our professions like us, we do have out-of-pocket expenditures. How do we treat it when it comes to calculation of turnover for eligibility of tax audit?
See, in case of service tax, when service tax was there, in certain circumstances, service tax was being charged. In certain circumstances, it was not charged. What are the circumstances in which it was charged? See, there are expenses like traveling, etc. And you have incurred expenditure of say 27,430. You have bills supporting it, and that those expenses are expected to be incurred by the client as per contract. But because of practical exigencies, instead of he incurring, you have incurred, so you have got the reimbursement. There it is not considered as a part of turnover. But if you say your audit fees are 10 lakh rupees and out of pocket expenses say 50,000 rupees, in that case you are charging on an ad hoc basis these out of pocket expenses. There it forms part of your turnover. That way it has to be seen for the purpose of tax audit as well.
Thank you, sir. Over to Jatin, please.
Thank you. Next question is again, sir, to Raj sir and Chitle sir, and I want both of you to comment on the same question. And again, this is very general problem, sir, that our professionals are facing. Again, it is related with the tax audit and stat audit, sir. So again, the question is like one of the I'll just read it out like whatever the question sent by by my professional brother. Is it permissible to submit the tax audit report while the stat audit of the books of account are still in the process? If this is possible, should we file Form 3CA or 3CB along with the Form 3CD for a company? And furthermore, after the completion of the client stat audit, is it allowed to revise the tax audit as Form 3CA, 3CB, whatever the case?
Generally, in case of a company, the tax audit is conducted after the statutory audit under the Companies Act. But in exception cases, where due to some reasons the company audit is not completed and tax audit date is due, and to avoid the penalty under Section 270B, the assessee can get its account tax audited from the auditor, but the auditor has to report in Form 3CB instead of Form 3CA, because Form 3CA is where the audit under other act has already been conducted. And here, because the audit is not completed, so he has to report in Form 3CB and Form 3CD.
Okay. Next question to Chitle sir. In continuation of this question, sir, like Raj sir has said, like we need to file 3CB instead of 3CA, sir. Right. Subsequently, when the accounts get audited by the stat auditor, then in that case, we have to file 3CA or 3CB. This is my personal question, sir.
No, once when you have submitted tax audit report, you have given true and fair view, you have fulfilled the responsibility. Thereafter, no further responsibility lies with the tax auditor. If in stat audit something more is pointed out which was missed by the tax auditor, then he may take a call of revising report because his report is erroneous. Otherwise, I don't see any responsibility for tax auditor.
Okay, thank you, Raj sir. Thank you, Chitle sir. Over to Manpreet.
Sir, a question. Basically, this is more. This is on the book side. Now, the tax audit requires us to mention what all books we have inspected and where is it maintained. Suppose there is some books accounts that the SESI maintains on a cloud server. How to go around that?
You want to know the place where it is mentioned, where
Yes,
in the books of accounts. So, in case of cloud, we have clarified in guidance note that it is the place from where the books of account can be accessed should be mentioned. Because in one of the seminars, I was informed that books of account are always kept in a pen drive. That time pen drive was popular, and pen drive is always in the pocket of the proprietor. So can we write pocket of the proprietor as place of account? So it is not. So ultimately you have to write in case of say like cloud from where the books of account can be accessed. And generally it is the registered office from which these are accessed. Only since we are discussing on this matter, if the books of account can be accessed at a place other than the registered office, then while we were discussing earlier, CA Raj Chawla pointed out that under Companies Act, books of account must be maintained at registered office. If you are not maintaining at the registered office, the board resolution has to be filed with the ROC. Right, Rajbhai?
Yes, sir. Thank you, sir.
So maybe the IP address, if in your opinion, IP address, should it be a cloud wireless server?
No, it is not. See, ultimately, you just try to understand each question has got some logic. Why this question is asked? Because if you go for survey, search, seizure, then in that case, they should be able to find that books of account. So they will select that place where the books of account are available. So if you give IP address, how they can visit that place and get it? They may not be having password. They may not be able to confiscate. So they will visit the place where the books of account are there. So whenever search warrant, seizure warrant are taken out, this place draws importance. Supposing if you say when you go for, you must be notice when you go for search, then the search team asks where are the books of account. At times they say कि हमारे books of account हमारे chartered accountants आपके पास है. Then search party comes to CA's office because he says that books of account are there. If the books of account are there, then that becomes office of the assessee, and that's why they get authority to visit. Otherwise, they can't come to CA office.
No, sir. Thank you, sir.
Next question is again mix of two act. So again, this TAQRB is serving the question related to Companies Act, GST, and again similarly for the income tax. The question is both of you, sir. The question is like subjective. The assessee has the turnover of 60 lakh, mix of GST, sir. Like assessee has the turnover 60 lakh, but he has not obtained the registration under GST. So whether he can offer 44 AD of the Income Tax Act or not, sir?
Under the Income Tax Act 1961 and for opting this 44 AD, if your turnover is up to 2 crore, then you can opt 44 AD by paying, by showing your income in case of cash 8% and in case of digital turnover 6%. But as the GST is a separate registration, which is required under the indirect taxation GST law, that must be complied with. If it is not there, then there may be problem to the assessee. Because as you mentioned that turnover is 60 lakh. So at a turnover of 60 lakh, GST is must. So the assessee must fulfill all the requirement of other laws also to claim the deduction or to declare the income under section 44 AD.
Right, sir. Thank you, sir. In
No, I
context,
think whether he's registered or not under GST, it is in the interest of assessee that he complies with all laws.
Yes.
Even if he is not registered, he can opt for 4480.
right, sir. Sir, in continuation of this question, is there any responsibility of the tax auditor to report this deficit that the turnover of 40 lakh rupees has been like overlapped by the client? We need to report separately in a report, or we need to separately report to the department regarding this, like the turnover is more than 40 lakh. So whether tax auditor has the responsibility of reporting such thing to the department or not, sir?
वो 44 AD के अंदर जाए तो आएगा ही नहीं ना टैक्स ऑडिटर के पास.
Okay, sir.
वो तो that is the problem with the assessee.
Right, sir.
As I mentioned, that because it is the duty of the assessee to fulfill the requirement under other laws, like he's responsible under GST also,
Right, sir.
because turnover is 60 lakh.
Yes.
And in India, after 40 lakh, you have to get the GST registration number and you have to charge the GST and pay to the government. And if he has not taken the GST registration, then he is not complying. He may have problem under GST Act. But under Income Tax Act, there is no restriction. Up to 2 crore, he can opt this 44 AD. Am I right, sir?
Yes.
Should we put any qualification in the report relating to this?
As mentioned by Chitle sir, no such requirement.
नहीं वो 44 AD के अंदर जाएगा तो टैक्स ऑडिट होगा ही नहीं ना, तो कहाँ
Tax audit तो है ही नहीं ना, कहाँ पे रिपोर्ट करोगे आप?
Right, sir.
Because he is opting only. It is advisory to the assessee that he should comply the other law requirement also.
Okay, thank you, sir.
Chitle sir, this one question is for you. This concerns clause 25 and I'm reading it for you, sir. Any amount of profit chargeable to tax under section 41 and computation thereof. Now the question that revolves around this is, suppose there's a liability which is barred by limitation. Is the tax auditor duty bound to report it under this clause?
What the question asks? Question asks if you have credited that amount to profit and loss account. If you are not credited, then there is no question of reporting. If it is time barred, what is meaning of time barred?
3 years of lapse.
Meaning of time barred is the right of creditor is impaired. It is not that your liability gets extinguished. If you want to pay, still you can pay. So if you continue your liability in books of account on liability side, there is no responsibility of reporting under section 41. When you write off, maybe after 3 years, maybe before 3 years, at that point of time, this question would be answered affirmatively by the auditor and amount will be stated.
Okay, sir. Thank you, sir. Next question is again related to the responsibility, sir, from the client side. So again, who will prepare the Form 3CD in the case of partnership firm, proprietorship firm, and the non-corporate assessee?
Tax auditor.
Yes.
Tax auditor will prepare. Draft is to be given by client, not the report. So tax auditor has to take his call and fill up the form. Only
Okay,
draft is given by him. So draft doesn't mean giving of report.
Okay, sir. Thank you. Next, over to you, Tanpreet.
Sir, this question concerns clause 23 and I'm reading it. Particulars of payments made to persons specified under section 40A2B, the related party section. The question that has been asked is whether we are supposed to actually state that this payment is in excess of what is the fair market value, or only are we supposed to report the expenditures?
What is the wording of question?
I'm reading it, sir. Particulars of payments made to persons specified under section 40A2B.
So it doesn't talk anything about reasonableness. So to mention all the list.
Okay, sir. We need not place any qualification or observation.
No, there is no issue of question of qualification. They have asked list, you have to give the list. That's all. Whether it is reasonable, unreasonable, assessing officer will see.
Okay, sir. Thank you, sir.
Next question to Rajji and sir, both. Is the provision of TDS applicable when an assessee intend to avail the benefit of Section 44 AD? Raj sir.
TDS provisions are applicable if the accounts are audited under Section 44AB, not under Section 44AD. So if you are opting this 44AD, then TDS provisions are not required to be complied with.
Sorry, what was the question?
So the question is regarding to the TDS applicability. If the person is availing the benefit of Section 44 AD, whether he need to comply with the TDS provisions or not. Like 10.
Yes, answer is in affirmative. Yes, he has to comply if applicable.
Thank you, sir. Over to Tanpreet.
So the question is concerning clause 31. This is a big clause, but then this concerns 269.
Which clause number?
Clause 31, sir. SS.
31.
Yes, sir.
Okay.
269 SS, ST and T reporting.
Yes.
The question is, should advance received from a person for sale of goods also be disclosed under clause 31? The advance is for sale of goods.
Yes. Yes, in affirmative.
Okay, sir. Over to Jatin, please.
Sir, next question is again to Raj sir and Chitle sir. Yes. So can an assessee opt for 44 AD for his business and 44 ADA for his professional consultancy business? Raj sir.
Yes, he can if he meet the required criteria given under Section 44 AD and 44 ADA. If suppose someone is running business as well as profession, then he can opt both. He can use both the sections if separately he has maintained his income and turnover, and the criteria for not a single turnover is more than as prescribed under Section 44 AD and 44 ADA. So he has to declare the profit separately under Section 44 AD as well as under Section 44 ADA.
Got it, sir. Thank you.
Chitle sir, the question is for you.
Yes.
Reporting under clause 22. Now, this clause 22 is for MSME reporting, MSME compliances in Form 3CD. With respect, the question is, sir, I'm reading it. For reporting under clause 22 of Form 3CD with respect to amount of interest inadmissible under clause 23 of MSME ED Act, can we assume that if invoice of the supplier does not contain his Udyam registration, then he is not a micro or a small enterprise? And the follow-up question is, do we have to include a request in our balance confirmation request letter to confirm whether the supplier is registered under MSME ED or not?
Second question first, that whether we should. So balance confirmation letters are actually written by the auditee to the enterprise. So there it is advisable. They ask whether they are MSME, not MSME. So that more light is thrown on it. Maybe besides asking, if they seek registration certificate, fine. As far as interest is concerned, the view is divided whether it is applicable only to the registered enterprises or also the enterprises which are not registered. So, to answer what is to be reported under clause 22, if the provision is made in accounts for interest under this particular clause, you have to report. If the provision is not made, then nothing to be reported. So, you have to ask assess if the provision is made under MSME Act, or he has made considering the one line in that bill, if you pay after 30 days, 12% interest applicable, something like that. So what is the basis? If the basis is this act, you have to report. And in any case, even if the basis is that footnote and he is making provision under that MSME Act, it will have to be disallowed. Of course, under MSME Act, what is the rate of interest? I think Rajbhai will be able to elaborate.
So just to add on question to this, sir. If let's suppose now the question is concerning if there's no mention of MSME ED number on the invoice, so is the tax auditor supposed to get behind the invoice and check whether this is registered or not, or is it to assume that this assessee is not registered, this vendor is not registered?
No, it is for the auditee to furnish the information. So you should ask the auditee who are the MSME enterprises. Now, if he gives certain names, in the name of this particular vendor is not included, where the bill says he is registered under MSME. So maybe he will have to confront, he will have to ask the auditee to give proof whether that mention is correct or not. And generally it would be correct. And you can also, Rajbhai would be able to tell, you can also check from the website whether he is MSME or not. And if you come to the conclusion he is MSME and the payment is made belatedly, the another issue to be confronted by the auditor is whether provision for interest is made or not. If the provision is not made, there is no need to report anything. Only thing is that if accumulated provision or expenditure on interest is substantial amount, then in that case, for 3CB, we will have to consider whether the true and fair view is reflected by the financial statements or not.
Yes, you are right, Chitle sir. It is the duty of the auditee to provide the detail of MSME, whether the MSME is registered or not, because auditor is responsible only towards registered MSME. Now, the problem comes that how the auditor come to know that whether this party is registered or not. First, the auditor should take the MRL from the auditee, because auditee also ask their vendors to give their MSME registration if they are registered. But as a precaution, auditor may send an email to the vendors to ask whether they are registered MSME or not. Because being auditor, we have the list of outstanding payment and we have the name of the party and amount. So in this case, the auditor can avail the email ID of the vendors and can send an email to the vendors that I am the auditor of this company.
Hey, Rajbhai, the email should be sent by auditee only, not by auditor.
Yeah. Through auditee. The auditor can send the email
through auditee with reply to auditor.
Yes, our accounts are being audited and our auditor is asking whether you are a registered MSME or not. And if your reply is received within, if you are a registered, then kindly provide your registration details, your Udyam registration. And if your reply is not received within 7 days from this email, then it will be assumed that you are not a registered MSME. Then the auditor can protect himself from this compliance. Also, as you mentioned, the delayed payment. Delayed payment means where the payment is pending for more than 45 days. And if payment is pending for more than 45 days, then there is a requirement of provision of interest. And that interest also should be the 3 times the bank rate. And also that interest to be calculated on the monthly compounded basis. So the auditor should also see and check whether the interest is provided in the books of account and whether the rate of interest is 3 times the bank rate, whether it is monthly compounded, and whether what are the reply received by the auditee from the vendors. So by this way, the auditor can protect himself and he should take the MRL also from the auditee.
Thank you, Rajji. This was exactly my question. One of our user asked that what should we do if the auditee is not supporting, is not providing the details of the MSME registered vendor. So thank you, Rajji. You just elaborated the process, what we should follow. So the next question is again to Chitle sir from my side. So Chitle sir, this question is relating to clause number 44. And the same, as per the user has mentioned the guidance note as well, but the problem lies with that the client has bought some motor vehicles. The credit of GST credit is again not available to the user in that particular case due to block credit. So while calculating as per the guidelines of the ICAI, which amount we need to consider while taking the total expenditure amount in clause number 44? It should be without GST or with GST, sir?
Whatever expenditure is recognized in the books of account.
Okay, sir.
So in this case, it will be along with GST.
Okay, sir. Thank you, sir. Over to Danpreet.
Yes, sir. So the question that has been asked concerns clause 35. Clause 35 is where the quantitative details are entered. The question is, in clause 35 relating to reporting of quantitative details, we need to report principal, main raw material or finished goods The follow-up question is, suppose in the current year, the raw material or finished goods which was reported till last year has been stopped by the company for production. How to report in such scenario?
See, whatever is the factual information that is to be provided. So earlier year, they were significant. You reported the quantity. Now you have discontinued. Fine, you need not report it. Only thing is that supposing that particular line of business is discontinued, there is another question in tax audit report earlier, which says that whether there is change in any business carried on compared to earlier year. So there, whether comment is necessary needs to be examined.
Sure, sir. Thank you. Jatin, over to you.
Thank you. The next question of partner is entitled to deduction subject to compliance of the other provision of the Income Tax Act, even if amount is not actually paid, sir.
Yes, as this item is not covered under section 43B, salary paid or credited to the partner's capital account is a allowable expenditure. But as in the previous question, Tanpreet asked this related to MSME, I want to mention here that in the Finance Bill 2023, this disallowance under section 43B have been widened, that if there is a delay payment towards MSME, suppose more than 45 days, even in the audit fees also, for my brothers and sisters who are auditor, if they are registered under MSME, under Udyam registration, and if your payment is not made by the assessee within the prescribed time of maximum 45 days, in that case, that expenditure will be disallowed under section 44B. But as regard to your question related to the partner salary, whether paid or credited to the capital account, it is allowed. So there is no problem.
Thank you, Raji. Over to Tanpreet.
Sir, a question not exactly with tax audit, but somewhere touching it. If total turnover does not exceed 2 crore, but business turnover is 1.59 crore and professional turnover is, say, for example, 40 lakhs, can the SECI adopt 44 ADA and 44 AD?
Yes.
Sure.
मेरा system है, हो गया.
Sure. Sir, another question that has been that has come across my tab, sir. This is concerning clause 29. I'll read the clause 29 for you, sir. Whether during the previous year the SECI received any consideration for issue of shares which exceeds fair market value of shares as referred to in clause 56 to 7B. If yes, please furnish the details of the same. Now the assessee, let's assume that this is a DPIIT registered assessee, and the fair value is obviously more than what is the actual one. Is the assessee still, is the tax auditor still report the same under section 29 or in the clause 29? I'm sorry, sir.
What question is asked under 29?
Whether during the previous year the assessee received any consideration for issue of shares which exceed the fair market value of shares as referred to in clause 56.
So here you are mentioning the case where the assessee has received consideration less than fair market value.
So more than fair market value, but DPIIT registered.
Basically,
the question doesn't distinguish between DPIIT registered or other. It's just ask fair market value and consideration received. So if consideration is received is more than fair market value, he has to mention it.
Okay,
now,
sir.
Because he is DPIIT registered, that clause will not apply, etc. That he will have to see while compiling return, while doing assessment. Like in case of section 50C, only question is asked is what is consideration and what is fair market value if the consideration received is lower than fair market value, that is ready reckoner value. So it is possible that ready reckoner value is 1 crore, you have received 90 lakh, say 80 lakhs, but that 80 lakhs may be fair market value because of certain stigma in your title, etc., etc. That you have to argue before the assessing officer. Auditor is concerned, he has to objectively report the questions which are asked. The question asks fair market value, consideration received. In this case, if consideration exceeds fair market value, you have to report, then you have to report without considering whether it is registered otherwise.
Just an add-on question, sir. Do we need to mention this as a comment in 3CA and 3CD, or do we skip it?
We are not asked. You have reported, like in case of 50C, they have asked questions, the ready reckoner value and consideration received if it is less than ready reckoner value. You have reported. Now, whether it is fair, unfair, that is for assessee to argue. You are not asked.
Thank you, sir. Over to Jatin, please.
Chitra sir, in continuation of this question, since India is the emerging market for the emerging market in the world, and there are so many startups are there in the market, and chartered accountants are giving services to them. So, what precautions should they take, and what kind of issues that you see in the market which are not properly taken care by the community? So, can you give some briefs, some precautions, something on this, what should we take care before, when we are dealing with the startups? To you, Raj sir as well, sir.
Yeah, Raj sir is vice chairman, so he would be more dealing with startups.
To you, sir.
No, see, as far as startups are concerned or any other assessee, ultimately they have to comply with the law. The auditor has to give the report in an objective manner. There are no different provisions for startup and for other entities as far as tax audit is concerned. Only by nature, maybe startup may be having paucity of human resource, paucity of trained accountants. So they should ensure from day one that they have better chartered accountants at their disposal on the side of accounting, on the side of compilation. So those precautions they have to take, because generally what happens, startups are not having adequate funds at their disposal for this purpose. So while considering their funds requirement, they should also consider the admin expenses and factor them in their projections and see that those costs are available so that they are able to meet the legal obligations. These obligations are under law. These are not created by chartered accountants or anyone else. So like if we say that, okay, what precaution I should do while driving a car? So I should possess license. So license costs. So I should not look at only cost of car, but I should see training myself, being able to obtain license and paying license fees. So similar precautions startups will have to take. Tax audit, maintain proper accounts, maintain proper record, compile the particulars in Form 3C and furnish them to the auditor in given time so that he is able to accomplish the report. But besides that, we don't see any special obligations. And wherever for sale of shares, wherever concessions are given to them, that if you acquire from say startups at a concessional value, etc. So they should also make available the data wherein they are able to canvass and get the concession or benefits which are available for startups. That's all.
In continuation of the startup, I have one more question. There are lots of cases where the auditor has been offered ESOPs. So is it
no, auditors are not offered ESOPs. Auditors are not.
ESOPs are given to employees only, not to the auditor.
And when auditor is offered ESOP, he will lose his license. That precaution he has to take, not to take ESOP.
Yeah, he has to face the disciplinary action also. Yeah.
So what if it is sweat equity? Just rephrasing the word.
No, state equity is also not given to auditor.
Okay, sir.
Okay, over to
I'm taking the question. Sir, this question is in income. This is income tax wise as well as tax audit wise. So we're supposed to report all the non-compliances under 40 IEA, the TDS which has not been deducted and all. So, sir, the question is capital asset, if there's any capital expenditure on which TDS was supposed to be deducted and not deducted, how do we disclose it, whether it is to be disallowed at 30% or not? This is the question that has been asked, sir.
No, 30% is disallowance for expenditure which has claimed. This capital expenditure is not claimed, so there is no question of claiming any, reporting any disallowance. That may come as a non-compliance somewhere relating to TDS question. But as far as this capex is concerned, now only provision has come is the payment made otherwise than by account pay check exceeding 20,000 or 10,000. In that case, benefit of depreciation is deprived of that payment. But as far as non-deduction of TDS is concerned, no other consequences there other than the penalty, interest, etc. under the chapter 14A relating to TDS, 14B, I think.
Okay, sir. Thank you, sir. Over to you.
One question I just received for Raj sir. If a block of asset comprise intangible asset, including goodwill, the WDV related to these intangible assets, specifically goodwill, sir, is required to be excluded from the WDV calculation of the said block of asset. In continuation of this, under which specific subclause of form number 3CD, this excluded WDV attributable to the intangible asset, particularly goodwill, should be reported.
Intangible assets being goodwill of a business or profession does not qualify for depreciation with effect from 1st of April 21, assessment year 21-22. So goodwill was eligible for depreciation till assessment year 2021. Therefore, if in a block of assets being intangible asset include goodwill, written down value attributable to intangible asset being goodwill need to be excluded from the written down value of such a block of asset. For the purpose of ascertaining such written down value for exclusion, cost of acquisition, cost of improvement, and rate of depreciation should be considered for making calculation, and the amount of depreciation and written down value should be worked out.
Thank you, Raji. Over to Tanpreet.
Sir, a general question. What is the criteria for determining the audit applicability for a commission agent?
Turnover exceeding to 1 crore.
Sir, the turnover calculation, as in the gross receipts are to be included or only the commission part is to be included?
No, only commission part, because when you say he's an agent, he collects turnover on behalf of somebody else. So if he's selling, say, television sets, he's collecting consideration on behalf of the principal. And now, for considering whether he's a commission agent or not, one has to consider the bill for material is issued to whom, the purchase and sell. At times, people say that they are commission agent, but the television company issues bill in the name of that commission agent, and he issues sales bill to the customer. In that case, although called commission agent, he is the dealer. But if the manufacturing or the company providing directly issues the bill in the name of customer, then in that case, only commission will be the turnover.
I think, Chitla sir, here this kacha adatiya and pakka adatiya clause is also applicable, because he's a kacha adatiya, means he's buying and selling the goods on behalf of other. Then only the commission income will be treated as a turnover. And if he is buying on his behalf and selling to others, then he will be the pakka adatiya, and then the turnover will be considered as the whole consideration.
Yes.
Thank you, sir.
Sir, one more question I have received for Raji. There is a CA brother, like he said, he has signed more than, he has uploaded more than 60 tax audit report as of now. Somewhere about 80, 89 he has written. So what should be the implication on this? Whether he can rectify this, or what should be the next course of action for him?
As there is no restriction under the Income Tax Act whether how much audit report he can sign, but under our the Chartered Accountant Act, he cannot sign more than 60 balance sheet. But he can sign if there are, suppose, other partners also, and he signing on their behalf. In that case, he can sign 60 on each and every partner's behalf. But if he on his own behalf, when he is suppose individual and proprietor, and he is signing more than 60 balance sheet, 60 audit report, then he may have to face the disciplinary action under the C Act.
Thank you, Raji. Over to Tanpreet.
Only while calculating 60, he has to exclude audits necessitated under section 44 AD, ADA, etc.
Yes, very correctly said. Only the audit will be calculated under section 44 AB, not 44 AD and 44 ADA. That will not come under this calculation of 60.
Rightly said, sir. Thank you. Over to Tanpreet.
Sir, this concerns the clause where quantitative details are asked. In case of a manufacturing concern, the question is the auditor failed to ascertain the yield of finished goods because of different measurement units of raw material and the finished goods. So how will the auditor report it under this clause?
It is on amount basis.
Wow, okay. So not
So
quantitative.
percentage of what you have to consider.
Okay, sir. Over to Jatin.
अली कुछ और क्वेश्चन है क्या? नहीं है? भेज दिए सर.
शेयर करें भी है सर.
है
एक दो है सर.
करो. आप ही पूछो.
ठीक है.
कंप्लीट करो.
सर एक क्वेश्चन ये आया है. दिस कंसर्न्स क्लॉज 31 wherein 269 SS and ST are sought. सर दो क्वेश्चन आए हैं सिमिलर क्लॉज के ऊपर, तो आई एम क्लबिंग इट अक्रॉस. सर क्लॉज 31 के ऊपर है ये क्वेश्चन, wherein 269 SS and ST are sought. So question number 1 is, if share application money is received in cash, would this be covered under this clause?
There are judgments that share application money does not partake character of loan or deposit.
Okay, sir. And the second question with respect to this clause itself concerns the RTR, the agent concept, sir. Any amount that has been received from the agent, would I report it under 269 SS as an advance or not?
Received from agent or received by agent?
Sir, both ways, sir. Both ways, because the principal would also be receiving from agent, sir.
Exactly. What principal receives from agent is not loan. It is the sale consideration of goods sold. What RTR receives is again not loan. It is the money received in trust on behalf of the principal. So both amounts will not come under 269 SS or T. Only since you have asked about share capital, let me dilate one more aspect, that supposing there are convertible debentures of say 10 crore rupees and they are converted into equity. When they are converted into equity, there is effectively discharge of debt. So liability is extinguished. In that case, there is breach of section 269T, because section 269T says that you cannot repay the loan otherwise than by account pay, check, draft, banking channels, etc. Here, the loan is repaid, but not by account pay instrument. It is repaid by conversion of it into equity. So in this case, reporting is necessary under section 269T. Now the question is that where there is breach of section 269T, it may get exposed to penalty. But penalty is exposed while you have to consider what is the purpose of section 269 SS and T. It is to arrest proliferation of black money. So if the source evidence is evidence for the purpose of giving of loan, in that case, repayment, although it is not in keeping with section 269T, penalty can be defended. So penalty will not get attractive because there is a reasonable cause that you are meeting the objective of the section by demonstrating what is the source of that money.
Thank you, sir. And there's another question that has come across, sir. Depreciation under Companies Act, which in the ITR we have to disclose, there's a separate segment, sir. Now, many tax auditors, in fact, I believe the CA colleague of mine has written this because he might be following this way. ICDS 5, we do report as increase in profit. Now, this leads to an anomaly between 143(1) and the return, because the assessee in the return discloses it under depreciation disallowable under Companies Act, but 143(1) picks it up from tax audit, which discloses it under ICDS 5. How to go around this method, sir? This is the exact question.
Now, in case of ICDS, you compare the treatment under ICDS and in books of account in tax audit report.
Sir, for the depreciation under Companies Act, should we disclose it under ICDS 5? I believe that is the exact question.
Yes, because see, what is the question asked in ICDS? You can just read.
So just give me a second. I'm opening the.
Yeah. Yes.
So there are two questions, sir. Whether any adjustment is required to be made to the profits or loss for complying with the provisions of income tax, income computation and disclosure standards notified under section 145(2). And then the follow-up question is, if answer to D above is informative, give details of such adjustments.
Exactly. So assuming that you have plant and machinery of 10 crores, which you have purchased during the year, say on 2nd of April, then in that case, you will be charging depreciation under company law, say 1 crore rupees at 10%. And income tax depreciation available is 1.15 lakhs at 15%. So the profit will be ascertained by charging depreciation of 10 lakh. Now, you have to really claim as per ICDS 15 lakhs. So the profit which is disclosed by P&L requires to be reduced by 5 lakhs to comply with ICDS. So the profit or loss which you are mentioning in earlier question is as per books of account. So there is always variation between the book depreciation and tax depreciation. So it will have to be mentioned.
So I believe that is also concerning the anomaly, because 143(1) automatically picks it up and it disallows double. In fact, even I have faced it a couple of times. So then
we have not noticed such instances, because ultimately depreciation is picked up as per depreciation, which is asked under different question. Here, other aspects are there, because under one ICDS, even your sales never matches, your purchases never match. So that is not added as income. Because in case of sales, you will be reporting 10 crore as sales in your P&L, whereas as per ICDS, is it 10 crore or 11 crore 80 lakhs? It is 11 crore 80 lakhs. So 1 crore 80 lakhs do not get added.
Okay. Thank you, sir. Over to Jatin.
Sir, one question has been again asked by the user. Is there any checklist available on the ICAI website relating to the tax audit, and some kind of like tools which you want to update us, like which we should follow during the tax audit? So he just asked this question, and on which area it is again given.
Chairman to answer. Chairman has published, no?
Thank you, Chitle sir. Jatinji, we have prepared a quick reference on tax audit. The soft copy of that is available on our website, TAQRB.
Right, sir.
So members are requested to download that quick reference, this book, which is published by our committee. We have given various suggestions and various guidelines for conducting this tax audit. So that will be very beneficial to all of you. So I think this was the last question.
Yes.
And only as far as tools are concerned, various tools are available in the market.
Yes.
And it is advisable that you use those tools. Say, for example, there are, say, 50,000 transactions of expenditure. And the question asked is, how many of them exceed 10,000, exceeding 10,000, otherwise than by banking channel? So even if humanly, if you verify, it would be very difficult to come to exact figure, or you may miss one or two. So there, if you apply the tool, then in that case, maybe within 5 minutes, tool will give you exact answer. So wherever automation is possible, it is always better. And after employing this automation, the chances of case being filed with the DC are less, or if the case is filed, you are able to defend that you are not negligent. You have used the tool for the purpose of certain answers, etc. So in market, one can check what tools are available and try to use as far as possible.
Excuse me.
And also there is a requirement of documentation. So those tools also take care of documentation. And which in one of our earlier sessions, we said that I had been member of disciplinary committee. And if there is charge of negligence, which the CBDT also are filing now cases, good numbers. So if the charge of negligence comes, you have to defend it. You are able to defend only if you have the documents available at your disposal to support you. So these tools also help in the form of documentation. Of course, with tools or without tools, there is no excuse for documentation. You have to document all the processes, audit report, etc., etc. And the quick reference service that TAQRB has published has all these programs, documentations, etc. suggestions are there. So, and also the size is small, because if this quick reference service is 5,000 pages, I'm sure you will not read it. But we have kept it small so that you will be able to read it and comply. And maybe you can also download from that and use it as an audit program by making appropriate adjustments.
Thank you, Chitle sir. Thank you, Chitle sir. Rashi also do have some question, I think.
No, I don't have any questions. Actually, I want to announce something that right now we have 1,465 participants live with us. So this is something really good. So congratulations to everyone.
Thank you, Rashi.
We continue now.
Or I question.
See, Okay. And in between, to Chairman Sir and the Vice Chairman Sir, I also want you to please guide the community about regarding the managing the work, how they can manage their tax audit. Like you are also available with us in this heavy time. What suggestion you want to give to the community, sir?
See, look before you leave. Before you accept the work, you ensure that you have adequate infrastructure available at your disposal. If that is not the case, then you don't accept. Second aspect is, supposing why I take more tax audits. Ultimately, it is not the issue of tax audit, it is the issue of volume of fees that I earn. So if by doing one tax audit, if I am able to earn, say, 10 crore rupees, I should be happy. So you should charge in such a manner that with lesser number of audits, you are able to meet your financial targets. If you keep your financial targets stationary and if your charging of fees is less, then maybe you will have to do number of audits. And when the number increases, the quality deteriorates. So we have to be careful. If the number increases and you want to maintain the quality, then human resource at your disposal also should increase so that you are able to pay adequate attention to each and every assignment. Consider each assignment as an independent assignment and give respect to each assignment the respect it deserves. So ultimately, for Chartered Accountants community, we have always been conservative. The principle of accountancy is be conservative. But let me tell you, while charging fees, you have to abandon this principle and be reasonable, maybe be extravagant. If you are extravagant, maybe you will be able to devote more time for the purpose of assignment, and that assignment will reflect better quality. Thank you.
Thank you, Chitla sir. Now Raj sir, please.
Very rightly said by Chitla sir that you only accept the work which you can handle. Otherwise, in life also, if we see that it is a very saying that ऐते पांव पसारिए जैती लंबी छोर, मतलब आप अपने पैर उतने ही पसारें जितनी आपकी चादर है, चादर से ज्यादा पैर ना फैलाएं. This is otherwise there will be stress.
Thank you, sir.
Sir, another question received. Can we upload unsigned financial statements, that is balance sheet and profit and loss account with form 3CB and 3CD? Chitla sir for you and Raj Chawda sir for you as well.
Unsigned by whom?
Unsigned by the SESI, I'm assuming, sir. This question is vague, but I'm assuming unsigned by the SESI.
If you upload unsigned financial statements, there is no mention of signing of financial statements. If you upload those unsigned statements, then you will be incurring a risk that those are the financial statements which the assessee wanted to upload. So if the signed statements are uploaded, then at least assessee cannot tell these were not the financial statements, or the assessee cannot disown. In case you upload unsigned financial statements, then there will be risk on the shoulder of auditors that tomorrow assessee may say these were not the financial statements which we wanted to really give for audit, or we have given for audit. So that risk is carried. Otherwise, under income tax law, there is no requirement of signing financial statements by any person. It is only signing of tax audit report that is required to be stated. And it says that tax audit report we are enclosing here with the financial statements. We are enclosing. It doesn't say we are enclosing signed financial statements. It says financial statements. So they are the financial statements. So the reporting will not be illegal, but you will be incurring more risk. Risk for assessing tomorrow disowning those financial statements.
Okay, sir. I'm skipping to the next question. If Jatin has any, the next question, sir.
There's no more question.
There are two questions that have been received simultaneously, sir. I'm just reading the first question out. Amount paid under VAT amnesty containing tax interest, whether all are to be disallowed and under which section? If I am disallowing it under section 37, which is residual section, the same amount is not auto-reflecting in form 3CD, which might result in mismatch in details of ITR and form 3CD. Please advise.
I believe that under VAT amnesty, you are paying VAT only. So if you are, what is disallowed under 37 is penalty. If you are paying VAT, which was supposed to be paid 10 years ago, still under section 43B, VAT is always allowed on payment basis. So if you are paying today, you should be allowed. Why it should be disallowed under section 37, I don't understand. As far as the interest is concerned, when the interest arises, it qualifies for deduction. So maybe one has to understand why VAT paid is being disallowed. If it is penalty, then it will be disallowed because penalty doesn't qualify for deduction. But VAT, I don't see why it should be disallowed under Section 37 when 43B expressly allows it on payment basis.
Okay, sir. The next question, sir. In the case of state cooperative society, the audit under Cooperative Act gets delayed. As answered in an earlier query, we are unable to do the audit under the IT Act because of the way they keep the recording. In such a case, can we file a draft audit report and revise later on getting the audit report?
I don't see any concept of draft audit report under Income Tax Act.
Negative. Okay, sir. Maybe carrying forward, sir, as you rightly said, as Chitla sir rightly pointed that whenever we file late, we can obviously take the cognizance of 274, and if we have a genuine reason, we can get an immunity from penalty. So even
it's not we, it's the assessee.
Yes, sir.
Chartered accountant is not subjected to penalty.
Yes, sir. That's what I meant, sir. Thank you, sir. Thank you. That was the last question
Yes,
from my end, sir.
And again, I also request Chairman, sir, like how the audience can ask the question for the next week. Please update on that email as well, sir, so that we'll get more question next time, sir.
Audience are requested to send their question either through this our live channel, or you can send your questions on our email ID, that is taqrb@ici.in. So you are most welcome. Next week also, being the last week of this tax audit, because we started this audit series. So if suppose date is not extended, then next week will be our last webinar. So you can send your queries, and our panelist, Chitla sir, all are available for you to reply your queries.
And the reason for receipt of less number of queries is not that they don't have queries. All the queries were addressed in earlier sessions.
Yes.
That is the reason that you are not receiving your queries.
Over to Rashi now.
Yeah. Such a complete package this session, first of all, sir, has been for our participants. So, ladies and gentlemen, as we conclude this webinar, I extend our heartfelt gratitude to our esteemed panelists, Chairman Sir C.A. Raj Chawla ji and Vice Chairman Sir C.A. Chandrasekhar Chitale ji for their insightful guidance. We also thank our moderators C.A. Jatin Tagra and C.A. Tanpreet Singh Kohli for their seamless coordination. Special thanks to attendees and the event organization team for their contribution to its success. Your participation and dedication have made this webinar a valuable experience for all. Thank you, and we look forward to your continued support in our future endeavors. Thank you, everyone.
And TAQRB thanks Rashi for the purpose of her
Thank you, sir.
availability in her business.